Okay, let's unpack this. We are all just swimming in this sea of information, right? Especially with the markets. What happened? What's next? It can feel like uh, a lot. So that's exactly why we're here today. We're doing a deep dive into the key market stuff from the weekend and, what's shaping up for the trading week ahead. Our mission, really, is simple. We cut through the noise from places like Reuters, The Wall Street Journal, AP News, Washington Post, Barron's, and we pull out the important bits so you can actually understand what's driving things without getting swamped. Keep it clear for you.
Exactly. And, setting the stage, it's this really interesting balancing act right now. You've got headlines shouting optimism, sure, but then there are these quieter
Hmm?
signals suggesting some real underlying pressures. It's about seeing that whole picture, not just the loudest part.
That definitely sets a fascinating backdrop. So let's jump into those upside surprises from the weekend. Friday finished really strong. The Nasdaq and S&P 500, record or near record closes. Best week they've had since, what, late June? And it wasn't just random, right? There was that boost from better consumer confidence, some solid earnings too, like Gilead, Expedia.
Right. And what's fascinating there is how that optimism got, well, a major nudge from a Federal Reserve development. Late Friday, President Trump named Stephen Miran as an interim Fed governor, replacing Adriana Kugler. Now, markets saw that and they immediately thought, dovish, leaning towards lower rates, which just reinforces the idea of a potential rate cut, maybe even next month. And that actually spurred futures to rally.
Okay, so that explains some of the jump.
It's a classic case, really. Personnel changes at the Fed, they ripple right through the market.
So Wall Street was feeling pretty good then, riding that hope of rate cuts. But if we shift gears a bit, there's this growing disconnect, isn't there, between Wall Street's mood and, well, what's happening on Main Street. I saw this point in this picture. The Washington Post, tariffs are now at their highest level since 1933. 1933.
Yeah, that's a really significant historical marker.
It really is. And that's not just some abstract policy thing. It hits households. Consumers like you are feeling the pinch, especially on everyday stuff. Groceries, for example. It's like two different economic stories playing out.
And if you connect that to the bigger picture, Barron's actually flagged risks of what they're calling inflation and stagflation light, which sounds ominous. Their analysis pointed to this troubling mix. Core inflation still rising, the economy slowing down bit by bit, and tech stocks looking, well, maybe overextended.
Okay, so stagflation light. What does that mean practically?
Well, they're pointing to the upcoming July CPI report, the Consumer Price Index, as a really critical test. That and the PPI, the producer prices. If inflation stays sticky, even with all this rate cut hope, markets could get turbulent. It really raises a question.
Wait, how much can a market rally just on hope if these underlying inflation issues don't go away?
Exactly.
So, okay, what does this all boil down to for you watching the markets this week? Let's try and simplify what to keep an eye on, especially early Monday.
Okay, the crucial watch points. First, absolutely the CPI and PPI data for July. Any surprise there, higher or lower, could immediately shift those Fed expectations. Second, keep watching Federal Reserve developments. Any more details on Miran or other Fed comments could move the needle on rate bets.
Makes sense.
Oh, well. Third, tariff and trade headlines. If that pressure keeps building, watch how consumer and business sentiment reacts. We just talked about the consumer pinch. And finally, just general corporate and global news. Think EV developments, say from Ford, plus major earnings reports. We've got Cisco, some Chinese AI companies, AppLovin, Tencent, JDD.com. Those can all move things.
Okay, so it really comes down to this core tension, doesn't it? You've got strong market performance, fueled by that optimism and rate cut hope. But underneath, there are these real concerns about inflation sticking around and those high tariffs. Our goal here is just distilling all that complex news into something understandable for you, keeping it simple, but getting the important details across.
And I think a final thought to maybe leave you with is how these things that seem contradictory, Wall Street's cheer and Main Street's squeeze, they're actually interconnected. They're all part of the same complex economic dynamic. Sometimes today's good news for the market plants the seeds for tomorrow's pressure point. It's just so important to look beyond those surface headlines, understand the forces underneath.
Absolutely. The deeper connections are always the most fascinating, aren't they? Keep exploring, keep questioning. That's all for this deep dive.